Before we get to some specific stock picks, let's do a look at growth versus value in terms of what we've seen. Growth slightly underperforming value this year. The gap, though, isn't so bad. What drives growth going forward? What areas in terms of the growth world look good?
What areas in the growth world? Well, the traditional areas that look good a lot or frequently are healthcare, consumer discretionary, and energy and technology. That's where we get most of our holdings from.
And in terms of those specific holdings, a little bit off the beaten path would be O'Reilly Automotive.
Sure.
Now, I've heard other analysts and portfolio managers be fans of this particular stock. We know that auto sales have recovered. It had a nice pop earlier in the year, a bit in a trading range as of late. What do you like about this stock? What drives it higher from here? Any worries at all about earnings growth slowing in the coming quarters?
There are always worries about earnings growth slowing, but two New Yorkers who don't own cars, they don't realize how big a market the replacement part market is around the country. $105, $110 billion per year. This is a company with 4,200 stores. Probably going to open 200 stores per year for the next several years. Just entered New England for the first time this year. Just entered Florida for the first time this year. High single-digit revenue growth, double-digit earnings growth, buying some of their own stock back each year, should continue going forward. In a market starved for growth, O'Reilly is a true growth company.
Is this stock impacted by the credit cycle? When interest rates start rising, will that impact auto loans, for instance, and perhaps make this more attractive?
Yes. One of the worries is that new car sales will hurt used car sales and the need for replacement parts. So that is a concern. However, they're able to overcome that by geographic expansion. And still the average age of cars is slowly creeping up past 11 years now.